Hey crypto friends, my name is Garrett and I am a crypto day trader who loves helping others with their trading. And in today's ultimate price action crypto trading guide, I'm going to be showing you guys how to use price action and how you can benefit from using price action in your own crypto trading strategy. And for those of you who love trading crypto and would like to try out the same exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here with the link in the video description down below this video. I personally love this exchange because they allow anybody from anywhere to be able to sign up and trade crypto futures. So if you are from the United States like I am and you want to trade crypto futures, you can do it right here on the Blowfin exchange. All right, guys, so we are just going to go ahead and dive right into this shit because price action is my absolute favorite way of trading the crypto market, or any market really. But when we are talking about price action, which is technically the study of raw price movements, meaning no indicators and no complicated formulas or anything like that to trade with, it's about the understanding of how and why price actually moves the way it does by watching candlesticks, patterns, support and resistance levels, and overall market structure as well. Now, the great thing about price action is it works in any market. I mean, literally every single market it works in, on any time frame, and it helps you to understand the actual story that the market is currently telling you as well. Now, as far as setting up your chart for trading price action, it's pretty simple, all right? What you need to do here is you need to remove every single indicator that you have on your chart. You want to remove every indicator and you want to add horizontal support and resistance levels, add trend lines, mark out any patterns that you see, and that's basically all you need to do to set up your chart for price action trading. However, there's a lot more to it than just setting up your chart for price action, all right? You also need to know and understand the key concepts in price action trading as well, okay? So the first one that we are going to talk about here is candlestick basics, all right? Each candle on the chart that you see tells a literal story, all right? Now, this is where shit gets really, really powerful, okay? This is where people usually start to understand and this is where people start to understand and really, I guess you could say, get and understand how price action works in relation to the candlesticks themselves, all right? So each candle you see on the chart literally tells you a story, okay? You get the open price, you get the closing price, and you get the highs and lows as well. And when you're looking at the actual candlesticks themselves, candles with long wicks typically show rejection at a certain price level, and candles with small bodies usually indicate indecision in the market, and candles with big bodies usually indicate volume is high and there's strong momentum going on, okay? So let me just show you some quick examples of that real quick, all right? So here we have got a very, very big, so we have got a candle with a very, very long wick right here, all right? So this candle has a very long wick, all right? Now, can you guess what that means? That means that we got rejected at this support level right down in here. And the way that I know that's a support level is because of this high that we created way back here. So this could be technically considered a support level right there, all right? Price ended up coming down. It ended up hitting that support level. It rejected it and went straight the hell back up. All right. So that is a perfect example of what I'm talking about here as far as looking at the candlesticks themselves and being able to tell where they are opening, where they are closing, and what the overall style of the actual candle is. You know, does it have a big body? Does it have a long body? Does it have a very long wick in one direction? You know, all these kinds of things matter and tell a story, okay? Now, the next thing that we have got here is overall market structure basics, okay? Which basically shows the way that price moves over time, all right? You want to be looking for higher highs and higher lows, which indicate an uptrend, all right? And then on the same thing, lower highs and lower lows, which indicates a downtrend, okay? And sideways highs and lows usually indicate consolidation, all right? That's kind of like what we've got going on right here. We've kind of got some consolidation, weird shit going on right in here. But being able to recognize these patterns will help you to be able to trade in the right direction though, all right? So as you guys can clearly see here, this whole thing right here, we are looking at the weekly chart right now, and this whole thing right there can technically be looked at as one, why did I do that? Can be looked at as one gigantic piece of the overall market structure here, since we are looking at the weekly chart right now. All right, so we can clearly see that right up in here, we had this big movement, we had this big movement to the upside right here, and then we started consolidating down here to the downside. All right, now this is kind of overall a big part of the market structure, because this tells you one right here, that one, obviously, within price action itself, we have what's considered a big, gigantic, I guess you could say, bull flag right here. So again, this is again with price action. We've got our bull flag right there, and we've got this higher low being created right here. All right, so this right here is our higher low being created on the overall macro time frame here. Okay, this right here is our higher low that we created, and then we ended up going back up once again. All right, so that's kind of what I'm overall talking about here as far as creating higher lows in an uptrend when we are going upwards. All right, so aside from that, let's go ahead and delete those. Let me go ahead and delete this. Aside from that, the next thing that I want to talk about here is going to be support and resistance. All right, support and resistance is where support equates to a price zone where buyers consistently step in and start buying, causing the price to bounce upward. And then we've also got resistance, which is a price zone where sellers consistently step in and start selling, causing the price to get rejected of going any higher and instead moving downward. All right, so this right here is a perfect example that this level right in here is a perfect example of a support zone right here. All right, we created this high way back here, and then we ended up coming down, and once we were up here, we can consider this zone as a support zone down here, and we ended up hitting that exact spot right there. Now, a lot of times price will not hit the exact spot every single time, but it will be insanely close. All right, now the same thing can be said right in here too. This high that we created right here in this big upward swing right here, that would be a resistance level when we were back here. But once we cross above it, like we did right up here, then it's considered a support level. All right, so because it's a support level, as you guys can clearly see, we went up and then we came down, we ended up coming down, and we hit almost exactly that exact level right there. All right, so you place a long order right in that spot, and boom, you start profiting all the way back up. All right, same thing with this level right here. Okay, once you see that we hit that support level, boom, you open your long position and you get to profit all the way from here down here all the way to all the way up here. All right, and that is where you make the big profits here with trading with support and resistance. And the best part about support and resistance is that markets react to these zones on a regular basis, especially on the larger time frames like the weekly chart and the daily chart as well. All right, typically what you want to do here is you want to create levels, typically what you want to do is you'll create these levels is by drawing these levels or drawing these horizontal lines based on recent highs and lows, and that's realistically it. So as you guys can clearly see here, with this trend going up to the upside, I've got the high marked right here, and on this big upswing here, I've got the high marked right up here, and then the lows, obviously with this trend, the low of this downtrend right here is that support level right there, so there's nothing to mark there. And technically you could, mark out this low of that trend right there. And then technically you could mark out this high of this trend right up in here. And therefore that acts as resistance. And then right here in this little area right in here, actually, support would probably be right around, let's see here. Support would probably be right around in here. And then that would be our support right there. All right. So overall, that is how you deal with support and resistance levels. It's really not that hard. Once you start to do it on a regular basis, and the more you back test and the more you go back in the price action itself and just start drawing support and resistance levels, you start to see where and why price rejects certain levels. And then you start to understand and you start to really get it in your head, and you're like, wait a minute, this is actually pretty damn easy to go off of, to be honest with you. And then you start to realize that, hey, you don't even need all these bullshit indicators on your screen that you've been using all along, because you can tell what the price is going to do just based off of these horizontal support and resistance levels, and that's really it. There's a lot of people out there who trade just based on support and resistance levels and candlestick patterns and stuff like that, and there's absolutely nothing wrong with that. There's a lot of people that are insanely profitable trading that way, and for good reason too, because quite frankly, support and resistance and price action itself, it does not fail. All right. Now, lastly, there's one more concept that I want you guys to pay attention to with price action, and that would be candlestick patterns, all right? Which again, all candles tell a story, which is why they are insanely, insanely important, okay? Some of the most popular candlestick patterns are going to be the bullish engulfing candle, the bearish engulfing candle, the hammer candle, the shooting star candle, doji candles, and inside bar candles as well. And I've got a cheat sheet with all of these candlestick patterns as well. It is right here. And you can clearly see it's got all kinds of different candlestick patterns on it. You've got your single candlestick patterns. You've got bullish not camel-stick patterns, bullish candlestick patterns right here, bearish candlestick patterns here, and then you've got your double patterns, and then your triple patterns, and then confirmation candle patterns as well. All right. So let's see here. All right. If you want a copy of that cheat sheet, what you can do is you can go ahead and reach out to me on my Twitter page, which is at Garrett_N_stuff, and send me a direct message, and I will go ahead and help you out, and I will go ahead and send it to you as soon as I possibly can. All right. Now, a good thing that I want you to remember with candlestick patterns is that they work best at strong support and resistance levels, okay? So, for instance, let me go ahead and show you some examples of some of these candlestick patterns, all right? So, let's go ahead and find some here. So, let's go ahead. Let's look at some bearish candlestick patterns here. Okay, so take a look at the shooting star candle right here, and take a look at the hanging man candle here right here as well, all right? So with the hanging man candle, we've got 3 bullish moves going to the upside, and then the fourth one is kind of this big bodied candle that has no wick at the top, but has a very big wick at the bottom, all right? So I think that was a hanging man candle there, yep. So we've got a hanging man candle right here, all right? We've got our hanging man candle right there. That tells you that shit's about to get bearish, and it definitely did, because we completely went down quite a bit from there. So that tells you right there, once you see that type of candle and the next candle opens and you see this candle beforehand, that tells you right there that, you know, hey, things are pretty bearish. We're probably going to move to the downside, and that's exactly what happened there. So if you were to have ended up shorting a position like that, you know, you could have made roughly around 20% or so without leverage. If you were using leverage and like 10x leverage or something like that, you could have made like 220% or some shit like that. But either way, realistically, I mean, you can trade just based off of support and resistance and these candlestick patterns alone. All right. So let me go ahead and show you another one. We will go ahead and show a bullish one next. Let's see here. Where's a good example? That one might be a good example. Let's see here. I mean it is technically, yeah, no, let me see here. I mean, it technically is an inverted hammer, but there is a little bit of a wick on the bottom side of it. This one right in here. Technically, it is an inverted hammer candle, but realistically, the same concept applies. All right, we've got our inverted hammer candle going on right there, and then boom, the next candle opened, and we got insanely bullish. We ended up crossing above. This resistance line that we had from this high back here, and boom, that would have been my signal to enter this trade to the upside and, you know, profit from the move to the upside. So the way I would have traded this is I would have saw this candle, I would have waited for the next candle to open. If the next candle that opened ended up going up and above our previous resistance, our previous big macro resistance area right here, boom, I'm going long right there, and I'm gonna ride this shit out all the way to the top of the next, all the way to the top of, you know, wherever it goes next. So if you were to have opened a position here, rode it to the top of here somewhere, could have made around 40% without leverage. With leverage, 10x leverage, you would have made about 400% profits right there on that, just that one simple macro move alone. So that's kind of what I'm talking about here as far as being able to tell what the market is going to do based off of support and resistance levels in in conjunction with candlestick patterns as well. All right. They all tell a story, they all tell you what could potentially happen, and they all do a very, very damn good job at showing you what could be happening next. All right. So, guys, now that we've got the key concepts of price action out of the way, we're going to go ahead and talk about some common mistakes that you want to avoid when you're trading price action. All right. The first mistake that you want to avoid is chasing price movements. All right. You do not want to be FOMOing into setups that are already overextended. All right. Instead, you should wait for pullbacks and retests. For instance, if you were watching this move right here and you waited to get in like right in here, I mean, realistically, yeah, you would have profited, but it wouldn't have been anywhere near as profitable as getting in way down here. Or it would be the same as if you ended up getting in way up here, all right? Because realistically, there's a lot of people that do that. They have a hard time being able to decipher where the top of the move is or where the bottom of the move is or where momentum is dropping or where momentum is building. And they kind of just get in blindly thinking that it's going to continue going higher when realistically they're buying at the top right there. So this is why you do not want to be FOMOing into setups. And you always, always, always want to make sure that you are not getting into stuff that is already insanely overextended. All right. Now, another thing that you want to do is you want to ignore or you don't want to do is you do not want to ignore the overall market structure as well. All right. You want to be asking yourself questions like, are we currently trending? Are we currently ranging? Or are we currently breaking out? You know, asking these types of questions will help you to be able to figure out which direction you should be looking for setups in. All right. And that goes for any time frame as well, not just the weekly chart. Now, another thing that you want to avoid is overcomplicating. All right. There's a lot of people out there who overcomplicate shit. The thing you want to remember is that simpler is better. All right. The more simple something is, the better it is. All right. Because price action thrives on clarity. It does not thrive on a bunch of random ass indicators on your screen. All right. So make sure that you have, if you want to try out price action trading, make sure that you are taking a very simple approach and not filling your chart with a bunch of random ass indicators. All right. Now, guys, before you go off and attempt trading with price action, I would highly suggest you practice first. Okay. So what you should be doing is go into TradingView, pick a random ass coin, and practice identifying setups from previous price history, like we kind of did just here in this video. All right. Mark out your support and resistance levels, follow price action with these zones. Watch how price levels respect or reject various levels. Look at the types of candles at those support and resistance levels, and start journaling everything that you see as well. This will overall help you in your journey to become a price action trader. Overall, though, guys, price action is literally a skill, and it's not just a quick strategy. It's not just a quick strategy trick or anything like that. All right. Learning how to read the market without relying on a bunch of random ass indicators will give you a much faster reaction time to the market. It'll help you build confidence in your trading, and it will help you to trade with very clean and simple setups as well. All right. If you can master price action trading, you literally never get lost or confused when looking at the chart ever again. All right. Now, before I go ahead and wrap up this video, if you guys enjoyed this one and you feel like you got some decent value out of it, please be sure to go ahead and subscribe to the channel and hit the like button below the video. And with that said, thanks for watching.